The union budget for 2026 is here, and if you're a salary professional, you're probably asking that one big question. So, what's in it for me? Well, you've come to the right place. We're going to break it all down and see exactly what this budget means for your finances.
So here's the game plan. We'll start with the big headline on tax slabs, then get into the brand new tax rulebook that's coming. We'll also look at changes that'll hit your wallet directly, see how tax filing is hopefully getting easier, cover some relief for special cases, and then we'll wrap it all up with your main takeaways.
All right, let's get straight to it. The one thing everyone wants to know about first.
And the answer is no change. That's right, the finance minister has decided to maintain the status quo. Your personal income tax slabs and rates are staying exactly the same for the financial year 2026-27.
So these slabs right here should look pretty familiar. This is the new tax regime, which is still the default option for everybody. As you can see, no tax on income up to 4 lakh rupees, and then it just climbs from there. This wasn't a huge shocker, really. It seems the government's focus is less on tweaking the rates and more on simplifying the whole system.
Now, even though the slabs are the same, this number is super important to remember. 12.75 lakh rupees. Why? Because when you factor in the 75,000 rupee standard deduction and the tax rebate under Section 87A, it means that salaried folks earning up to this amount will effectively pay zero income tax. That's a huge deal.
Okay, so the rates are stable, but the rulebook itself, well, that's getting a complete rewrite. And honestly, this might be the single biggest structural change in the whole budget.
And this really shows you just how big a shift we're talking about. The Income Tax Act of 1961, which has been the law of the land for over 60 years, is being retired. Starting April 1, 2026, a brand new Income Tax Act 2025 is taking its place. This is a massive, massive overhaul.
So you might be asking, what's the point? Why go through all this trouble? Well, the government has laid out its main goals pretty clearly. They want to bring in much simpler rules, redesign the forms so that they actually make sense to the average person, make the whole compliance process easier, and ultimately improve what they call the overall ease of living.
So a new rule book is one thing, but what about changes that are going to have a direct impact on your money, like right now? Let's dive into some new rules on TCS, buybacks, and exemptions.
Okay, first up is TCS, or tax collected at source. Before we get into what's new, just a quick refresher. This is basically a tax that a seller collects from you up front for certain things, like an overseas trip. They deposit it with the government, and you can claim it back later when you file your returns.
And here is some genuinely good news. The government has made a major cut here. TCS on overseas tour packages used to be as high as 20%. That's been slashed to a flat 2% with no minimum amount. And for money you send abroad for education or medical reasons, that rate is also down from 5% to 2%. This means a lot less of your cash is tied up front. Now, for all you investors out there, this next one is a big deal. The way share buybacks are taxed, it's been completely changed. Before, when a company bought its shares back from you, that money was taxed as dividend income. But now, it's going to be treated as capital gains. And why does that matter so much? Because it means you can deduct what you originally paid for those shares, which could seriously lower your final tax bill. It's a much, much fairer system.
All right, moving on from tax rates and rules, the budget also focused on the actual process of filing your taxes. They've introduced some key reforms to hopefully simplify compliance and reduce a little bit of that yearly stress.
So let's run through these quickly. First, if you make a mistake, you now have more time to fix it. The deadline to file a revised return is now March 31st, up from December 31st. Second, to stop the tax portal from crashing, deadlines are being staggered a bit. Individuals are still July 31st, but some others get until August 31st. Third, getting a lower or nil TDS certificate is becoming automated for small taxpayers, so no more applying to an officer. And finally, submitting Forms 15G and 15H to avoid TDS is also getting simpler for investors.
The budget also included some very specific relief measures aimed at particular groups of people who are facing some pretty unique circumstances.
Now, this is a really important and compassionate move. Any interest that's awarded by a motor accident claims tribunal is now completely exempt from income tax. This ensures that victims and their families get the full amount of their compensation interest, no tax, no TDS deducted. It's a small but very meaningful change.
And then there's this new disclosure scheme for certain people with foreign assets. It's really aimed at students or maybe tech employees who might have made some honest mistakes. It gives you a one-time 6-month window to declare any undisclosed foreign assets or income up to 1 crore rupees. You pay the tax, plus a penalty, and in return, you get immunity from prosecution. It's basically a chance to come clean and regularize everything.
So we've covered a lot of ground. What does this all really boil down to for you, as a salaried person? Let's bring it all home. You know, this quote from the finance minister really captures the whole spirit of the tax proposals this year. The main theme wasn't about changing how much you pay, but about changing how you pay and interact with the tax system. The goal is simplicity, and what the government is calling ease of living. So here are your 4 key takeaways. Number 1, stability. Your income tax rates are staying put. Number 2, simplification. A whole new tax act is on the way, promising to make things easier in the long run. Number 3, relief. You're getting some direct financial benefits from lower TCS on foreign spending and a much fairer rule for share buybacks. And finally, number 4, flexibility. You have more time and easier ways to file and revise your returns. All in all, it's a budget that's more about the process than the percentages.
And that brings us to our final question. The stated goal of all these tax reforms was simplification. A new act, redesigned forms, easier processes. It all sounds great on paper. But as we all know, tax is never really that simple. So the question we'll leave you with is this. After all these changes are in place, will your tax life actually feel any simpler? I guess only time will tell.